professor has also just joined us. We are just setting him up. That is Professor Lord Mensah, who is also with the University of Ghana Business School as an associate professor and a full-time professor at the Ghana GIMPA, let me put it that way. He is a full professor over there. So just as our speakers join us, give us about 2 minutes. We would just set all of them up immediately, and then we will start the discussions for tonight. But you should be ready. As we initiate the discussion, we invite each and every one of you to share your thoughts, your insights, and your questions. And you can do this by tweeting at Norvan Reports, or you can go to the chat box and then leave your questions over there. Sorry, ladies and gentlemen, what you do is that when you leave your questions there, we will definitely come back to it. And our housekeeping rules is that we allow our speakers to put across, their points, to put across and educate us very well on the real issues that we need to look at as far as, what we are discussing is concerned. And what we do is that when we are done, we obviously would, allow you to also ask your questions. Tonight, we're also live on ABC News GH, as we do all the time. We are looking at other means to still, expand our, somebody will say, our horizon, that is getting more people to be part of this discussion. We've been contacted by other radio stations who would want to pick our discussions, and we are open to all these discussions, trying to help educate the Ghanaian public for them to understand as far as the issues are concerned. And tonight, my name, if you just joined us, my name is Norvan Reports. I am your moderator for tonight, and you're welcome to the Norvan Reports Economic Governance Platform X Space series. Our topic that we are looking at in today's discussion is one that is is important, one that we all need to understand. What are we looking at? Ladies and gentlemen, it is analyzing Ghana's agreement with external commercial creditors, the impact on the economy in an election year. And remember, I will just take you through some few or remind you that, the government has been able to get approval. So in some few minutes or hours, no, not minutes, in some few hours, we're expecting the second tranche, okay, of the 600 million from the IMF after the successful first review and the board approval that came. So yes, that will be coming to us. The finance minister was very confident of reaching a deal with the commercial creditors by mid-March. That is what he has said. So it means that these commercial creditors, he hopes that mid-March, he should reach an agreement with them. Again, we have seen some gains signals happening as far as, the debt restructuring program on Ghana's bonds. So we've seen that. So let's bear that in mind. And then the World Bank Board is to give us some 300 million to support the budget. Okay? It's to support, beg your pardon, to support the budget. And then, we had the finance minister announce at the World Economic Forum that they've been able to get a moratorium for our debt with official creditors to, be moved through. So he said, and if you recall the story that we did some days ago, we said that Ghana has won a moratorium with official creditors on debt payment through May 2026 and expects to reach a deal with the Eurobond investors to revamp the 13 billion debt by the end of March, which I've indicated to you. So a moratorium has been given to push it to next year, May 2026, next 2 years, May 2026, where, they try to, do the restructuring, and then we'll see how that is going to affect us. Fitch has also forecasted some 800 basis point cut in Ghana's base rate for 2024. Bear that in mind. I just want you to bear all these things that I'm mentioning. And we've seen how government have been so much interested in the treasury bills. We've seen how, they are going in there and taking monies there. Some people say it's a bubble getting ready to burst. Is that the case? We don't know yet. We will be, dealing with all these matters, next matters, as we go on in the year 2024. But for tonight, as I indicated, our guest for tonight is Professor John Gachi, Dean of School of Business at the University of Cape Coast, and then Dr. Priscilla Chumesi Bafo, Senior Lecturer at the Department of Economics at the University of Ghana. Also joining us is Professor Lord Mensah, Associate Professor of Finance at the University of Ghana Business School and a full-time professor at GIMPA. So take note of that. And what are some of the key things that we will be looking at tonight? Ladies and gentlemen, I told you that with this discussion, as we invite the discussion, we invite each and every one of you to share your thoughts, your insights, your questions, and your participation is crucial in making this an enriching conversation. And we look forward to a robust exchange of ideas as we do here all the time. The key points we'll be looking at understanding the external, credit landscape and agreement, and then looking at the economic implications, the challenges, the opportunities, transparency and accountability, and also future prospect in an election year. These are the key areas that we'll be looking at. And I want to say a big thank you to our guests who have already joined us. And so we're going to start the discussion. As they say, ladies first all the time. So let me start with Dr. Priscilla Chumesi Bafo. Doc, thank you very much for your time tonight. And we want to come to you first for you to share your thoughts looking at the topic that we have tonight, the external creditors, its impact in an election year. I mean, help us. I mean, should we be worried? And looking at all the things that I've mentioned, should we be worried looking at what is happening with all our debt situation as it is? Doc?
Thank you very much, Norvan. Good evening, and let me say a happy new year to everyone. Thank you for the opportunity.
Doctor,
as you,
if you can hear me.
Yes, can you hear me, Norvan? Hello.
Yeah, I can hear you. I can hear you from here.
Okay.
Yeah.
Yes, please.
I think Norvan is having a problem. This Professor Lord Mensah.
Okay. Hi, Lord. Good evening.
Good evening. I think Norvan is having a problem.
Okay, so should I go ahead?
Yeah, I think you can go ahead. Majority can hear you.
Hello, Doc.
Okay. Yes, Norvan, I can hear you. Yes, I can hear you.
Okay, since we are not hearing her, I don't know if anybody can hear Dr. Priscilla.
No, I can hear her.
Okay, since we are not hearing.
I can hear her speaking.
Professor Lord Mensah can hear me, Norvan.
Yes,
I'm not sure. I'm sure other listeners can as well.
Hello, Norvan.
Yeah, no, we can hear you. Please go ahead. Please go ahead.
Somebody has given a thumbs up. I think.
Okay, great. Okay. So I thank you once again for the opportunity to share my thoughts on this.
Yeah, no, we can hear you. Please go ahead.
Somebody has given a thumbs up.
Okay, great. Okay. So I thank you once again for the opportunity to share my thoughts. No, but I'm having. Okay, is it clear now? Because I could hear the. Is it clear now? Hello. Oh dear.
Oh, you are clear from my end. You are very clear.
Okay, Lord, I'll go with you then.
Yeah, it's very clear. Please go ahead, though.
Okay, great. So I was saying that yes, essentially this topic is quite critical. We know that Ghana has gone through turbulent times in recent times. Essentially, prior to getting onto the current ECF program under the IMF, we needed to show a debt sustainability path because essentially Ghana's debt was unsustainable. And how was this measured? We know that is basically looking at the debt to GDP ratio, which a lot of people raise issues. But essentially, Ghana's debt was unsustainable. And so we started with a domestic debt exchange, which was quite painful. We've gone through it, and Ghana managed to get some gains out of it in terms of a break with regards to servicing of our debts. But we know that under the conditions of the IMF program, which is basically to see that to it that the country is on a solid debt sustainability path to maintain macroeconomic stability, reaching an agreement with external creditors was critical. And we also know that external credit negotiations are not as simple or quote unquote that easy compared to domestic debt restructuring. So it was a big deal. And so essentially, I would say that the fact that the country has managed to get this agreement is great. Why am I saying is great? Because we know that it has paved the way the release of the second tranche of the funds under the ECF program. And this is coming at a very critical time. Why am I saying that? We know that cyclically, January, February, we find that there are always turbulent times on the foreign exchange front in the economy because a lot of companies will be repatriating profits. A lot of people would also be changing funds, foreign exchange for one reason or the other. So you find that there is always pressure on the forex market around this time. So for me, if this agreement had not come in time for the release of the funds, there would have been a lot of speculative activity on the currency. And we know that fundamentally, the country depends basically on imports. So whenever there is instability on the foreign exchange front, it translates into everything. And so if these funds had not come at the time it's coming, I am sure that we would have been in very difficult times with the CD depreciating at a fast rate around this time. We know that because of all that the country has gone through, there's been some marginal gains with regards to, for example, inflation. Inflation is around 23% as of December last year. This was around 54% in December 2022. So when you track these indicators, you can tell that really the IMF program has brought some kind of relief in terms of relative stability we are seeing in terms of on the fiscal side, on the external side, and also on the inflation and the currency bits. And so the issue for me, if you ask, what is the implication of this in an election year? We know that the agreement gives government some breathing space in the sense that government places a moratorium on servicing of external debts. Now it's gone beyond that to reach this agreement for long-term opportunities to pay back or service these external debts. That means that some important resources can be used channeled into other areas. But the reality also is that these agreements do not write off the debt. That is something we need to bear in mind because essentially the country will service the debt, but the future dates. And if that occurs, I think that we need to be careful in terms of our financial arrangement to make sure that there are funds by the time we get to the point of the maturity after these agreements. And so in an election year, you would expect that there would be issues with capital expenditure. Government would want to come out to make sure that roads are being constructed for the electorate to know government is doing something. I would be a bit more cautious and caution government to proceed with a lot of caution, in a sense that although we see some activity or a rebound of the economy, even in terms of the growth side, we are still not out of the woods. And essentially, to the extent that we have gone through this debt restructuring, it should tell us that we need to critically work on the structural challenges, which always brings us to this point. The need to build resilience in the economy so that post this program and post the debt restructuring and everything, the country does not find itself back into this situation again. Norvan. Hello.
All right. Thank you very much, Doc. We are grateful. That's a good presentation over there. So, Doc has made it very clear to us, ladies and gentlemen, that with her, I mean, there are things that need. Thank you very much, Doc. We're grateful. That's a good presentation. So we're going to move from here to Mr. John Gachi. Mr. John Gachi,
Hello.
Mr. John Gachi, if you can come in here and then also help us, give us a sense of what you also think about the situation, sir. Prof.
Well, thank you. Just to add on, I think another important implication of the agreement discussed at the end of last week is the moratorium. It seems as if we are getting double moratorium from these bilateral creditors, because moratorium is a normal addition to the conditions of credits from bilateral institutions. We saw example of that with the IMF program, IMF credit in 2020. We were given some moratorium that after 5 years before we start paying the $1 billion that we got. What it means is that those that have been, that has come under this agreement, they might have given us some moratorium in the past, and today we are also getting moratorium. So that's what I'm calling it, a double moratorium. And that is good for the economy. Because if you start paying those debts in 2026, what it means is that you are not under pressure to have some kind of debt burden or repayment burden because of those debts now. So that is a good development for the country. But we shouldn't interpret that to mean fiscal space to engage in borrowing, etc., because it will be very crucial for the country come 2026 going forward, because we'll come out of election just about 1.5 years, then we will be faced with payment of those debts. So we need to guide this opportunity given us seriously to ensure that we engage in prudent expenditure. We moderate our expenditure in a manner that our revenues that we are getting, we are able to accumulate to be able to service the debt come the period after 2026. That is very crucial, because I heard the finance minister being happy because the agreement gave a fiscal space from now to 2026, and that they can do something great about it. But the point is, our revenue, no matter how it increases, is not able to match up with our expenditure. There is always some gap, and there will always be pressure on the economy in terms of servicing our debt come 2026. So we need to be very careful about that. Then again, that has implication for political governance of the country, because we are going into an election December this year, and we don't know who will win the election. The finance minister will not be there come 2025. So if all the debts are now front-loaded into from 2026, what it means is that if care is not taken, the government that is coming is virtually coming to service debt as the major priority of that government. And I'm not sure in the coming government, either MPP or NDC, it would take it so lightly that all the debt obligations are front-loaded into 2026 for them to start paying as the major obligation under their government. So those discussions will soon begin to come up in the country. Then the election year expenditure, I believe we need to look at it in context. I'm not sure. It's just advice we are giving to government, but I'm not sure the government intends to respect those prudent fiscal measures that are required, especially in election year. Remember, we have kicked away fiscal responsibility. That is one. Remember, even when we had the Fiscal Responsibility Act, we violated it in the first year, which means that our appetite to disregard our own regulations, our own rules to ensure fiscal responsibility is questionable. Now, if we look at the IMF statement on guiding against overspending during election year, the IMF is quite clear that for them, what they are looking at is that the country has approved a budget. And so long as the government is spending within the parameters of the budget, they don't have problem. So it means that if we approve the budget and certain areas of expenditure have been approved and that are questionable, those are the areas where frivolous expenditure in election year will come up. But again, most of the election year expenditure do not come through the budget anyway. They come through expenditure outside the budget. So it's very difficult whether we have an IMF program, and for that matter, the IMF program will safeguard the prudent expenditure from work of the country. IMF is not looking at that.
Hello, Prof. Can you hear me? Professor John Gatti. It looks like we are losing you a little bit, and so let me bring in Professor Lord Mensah at this point, since we are losing. I don't know. We haven't. Yeah, I can hear you now. You can go ahead, sir.
Okay. So I was talking about the crucial nature of safeguarding expenditure in the election year. The president indicated that the 1 year left for him, he will make Ghanaians feel his government. And that can only happen if you want to satisfy the electorate through expenditure in a manner that will not be accommodated by the budget and by the fiscal prudent measures of expenditure. So all of us need to guide, the journalists need to understand the framework within which expenditure should be undertaken, that will not be described as spending for elections. If we do not do that, the government will do anything to ensure that it pleases electorate and to see whether it can attract a vote.
All right. Thank you very much, Professor John Gachi. If you just joined us, this is the Norvan Reports Economic Governance Platform X-Space series. Tonight, we are analyzing Ghana's agreement with external commercial creditors and the impact on the economy. So we know that there's some level of agreement with these Eurobond holders and all the commercial guys. A moratorium that has been given, an announcement that the finance minister made at the World Economic Forum when he was speaking, and then indicated that we have up to 2026 to come back and then start the payment. Again, I beg your pardon, he indicated that by mid-March, they hope to reach a full agreement with these people. This means that, and we know that also the IMF has approved the second tranche of $600 million to come in. And Dr. Priscilla Chumesi is of the view that, yes, this is needed. It's confirmed by Professor John Gachi. I don't know what Professor Lord Mensah thinks about this. Some 300 million that is supposed to also come in to support, the budget as well. So with all these monies that are coming through, and it's an election year, Professor John Gachi is indicating that, listen, journalists and all of us as Ghanaians must be able to open our eyes, because most often than not, you don't see the election spending coming through the budget. It goes to the back door. And so it means that we should be careful and then follow where the money goes. I want to believe that's what he's trying to tell us. Professor Lord Mensah, if you can hear me and can unmute yourself, I will at this point ask Dr. Priscilla Chumesi to mute, and then Professor John Gachi also to mute, whilst we have Professor Lord Mensah unmuting and then, sharing his initial thoughts, what he thinks are the real dangers that we need to look out for as far as 2024 is concerned with all that is happening around us. Professor Lord Mensah, if you can hear me, please, if you can unmute.
Yes, I can hear you loud and clear, but I don't know if you can hear me with my voice. Pardon me for my voice. I've lost my voice completely. Can you all hear me, please? Norvan, can you hear me? Hello, Norvan? Hello, Norvan? Hello? Hello, Norvan? No, can you hear me, please? Hello? You can hear me. Okay. Sifam, can you hear me? Okay. Am I on air, please? Norvan, can you hear me, please? Is anybody hearing me, please?
Yes,
hello?
I can hear you, Lord.
Okay, thank you.
I can hear you.
Okay, thank you, Priscilla. Am I on air, please? Norvan, can you hear me, please?
Yes, I can hear you, Prof. Please.
All right. Thank you.
Yes, we can hear you. Please go ahead.
Thank you, Norvan.
Yes,
thank you very much. Right.
Okay, thank you.
Yes, pardon me for my voice. I've lost my voice, but then I'll try to open up to your hearing. You see, when we talk about our external debt, we have to appreciate the composition of this external debt. I mean, the bilateral creditors and the multilateral creditors component is very, very small. I mean, when you talk about the bilateral, which we seem to jubilate because we've gotten moratorium with them, the composition, I'm looking at the 2023 quarter two debt bulletin from the Ministry of Finance here. Our bilateral, our debt is about 4.3% of our external debt. The bigger chunk is in the Eurobond, which is the bigger commercial, external creditor bond that we may have to deal with in terms of the negotiations. But then looking at the diversity of these Eurobond lenders, I would tell you that it's not going to be as easy as we've had with these creditor committee coming from our bilateral external creditors. So I would say that yes, indeed, we've made some gains, But then, if you look at the positioning of the what we call it, the external, bilateral creditors, it is, a very good position for us because, I mean, they've given us a certain leverage in terms of credibility and then also having the IMF support. I can tell you that, yes, we're going to have a very good leverage when it comes to negotiating with these external, creditors. But then we should also appreciate that this agreement that we're going to have, I mean, is going to unlock some funds coming into the country. As of this year, coming from, January, coming from last year, January, all the way to the end of the year, we saw the limitations in terms of financial flows when it comes to what goes into government coffers from the external sources. We're locked up from the Eurobond market as some time ago we had, and then also the suspension of our external credit service and all those. I mean, it has a tendency of having some impact on the stability that we've been enjoying. So we shouldn't be so swollen headed and say that, yes, indeed, our economy is doing well. Or, I mean, we have to resume all these services after the negotiation, debt services after the negotiations. That is when we'll get to know the full scale of the economic activities when it comes to our debt service. Then, in that case, we can tap the government at the back and say, hey, you are doing well or not. Apart from that, the inflation coming down, the exchange rate stability, and all those, I see to be more or less a kind of cosmetic because we've not gone into full scale, debt service yet. So, from where I sit, I think, from the IMF program, we have a lot of limitations when it comes to government spending. But there is an opening, which, I mean, we may have to be careful. The opening is, I mean, spending to protect the vulnerable. With the IMF, program does not frown on it. IMF program, in fact, support expenditure lines that goes into protecting the vulnerable. And I believe that if we don't take care, being an election year, government is going to hide under this, kind of, policy, and then be spending unnecessarily in the name of protecting the vulnerable. But meanwhile, the vulnerable will not be getting what they're supposed to have. We also need to understand that IMF stands for economic growth. They don't stand for economic development. That is why they are so quick to tell you that your economy is doing well per the economic growth numbers. But then in terms of development, as to whether that growth that we are enjoying is well distributed across the various phases of the population. That is very, very important to note. So, Norvan, I would say that yes, indeed, we've gotten a kind of moratorium from our bilateral creditors, but that is not the bigger composition of our external debt that we need to negotiate on. Like I said earlier, that's about 4.3% of our external debt. The bigger one is the Eurobond, and we should always appreciate the diversity of these Eurobond lenders. These are people's pensions. These are people's, what we call it, investment, that personal investment that they have. And so there's that kind of heterogeneous expectations in terms of what we call the negotiations. But when it comes to these bilateral creditors, at least the various representations, the Standard Creditor Committee and all those, they represent their countries and they can take decision on their behalf. But when it comes to the Eurobond, which is the bigger, chunk of the commercial, creditors, we really have to be, a bit, careful. But I can tell you that we are making inroads. Just that we need to be cautious. And the main thing that I'm emphasizing on before I finish is that government is likely, and let me emphasize on this, government is likely because that is what happened during the COVID era. Government, the IMF program makes room in protecting the vulnerable. And I'm repeating this because that is where if we don't take care, the electioneering overspending can go. And so if we go in that line, trust me, we may derail this economy and bouncing back after elections will be, a problem. Over to you, Norvan. Thank you.
All right. Thank you very much, Prof. That's also a good one over there. We're grateful for that presentation, and let me come back to Professor John Gachi. Prof, let me come back to you at this point, and then ask you. I mean, you had your colleague Professor who says and buttress your point in a way as to an area that we must keep watch, that government will take advantage of the IMF program that allows people to spend to just get in there and then do the expenditure that it wants to do and then spread the money around, which can come back to hurt us. Now, if that is the case, how do we ensure transparency? I mean, because it all borders on, transparency and accountability. How transparent are these men, and how can stakeholders ensure this transparency, especially if you look at what role civil society should be playing in monitoring these arrangements and follow the money to ensure that it's used for exactly what it must be used for?
Norvan, is that my question, please?
I think that's mine.
Oh,
yes, Prof. That's yours. Go ahead, please.
Okay. Yeah, I think, first of all, we appreciate the fact that targeting the vulnerable that this budget line is designed for is very difficult in the country. When they say they have increased some amount for the LEAP beneficiaries, you ask yourself, who are those LEAP beneficiaries? How are they selected? So that is one problem there. And government will use that to do whatever expenditure they want to engage in. And remember, the LEAP, as we are talking now, does not profile all the vulnerable that we're talking about. Remember, just few months ago, the Ghana Statistical Service told us that over 850,000 people have fallen below the poverty line. The question is the LEAP targeting this new crop of 850,000 people who have gone below the poverty line? That's one question. Then again, the World Bank has also presented a report indicating how precarious the poverty profile in the country is. So how are we going to tackle that? That's why the civil society, journalists, etc., come to the equation to ensure that they question some of these expenditures, they question how these people are being identified. Remember, during COVID, when we said that we were providing some relief to businesses and people, entrepreneurs here and there, you know the story very well. It didn't go well with us. We didn't distribute the money prudently, and all these things are part of the debt that are accumulated we are paying today. So I think that civil society should be very active in this aspect. If not so, that will be one of the surest conduits for which government will use to spend beyond what is expected in an election year.
But Prof, yes. So you think that is one of the conduits. Beyond that, how? I mean, what a talk beyond just trying to monitor, request for information, and all that. What extra things can we have civil society journalists do? Because as you indicated yourself, these government officials would always find a way to spend these funds that are made available to them. Is there something that you can suggest that can be done, for us to know? Because some have said, first of all, you need to understand the agreements. What is exactly is in there? Know, as you indicated, the number of people who are registered. What were the criteria that was used in selecting them? Are the people who receive the money really, really the vulnerable in society? How are we ensuring that these things are happening? And that is one of the ways of ensuring transparency and accountability. many years, we've seen, this being used as a loop to, get money off the system into the pockets of individuals who don't deserve to have it. How do we go about it? I will still have you, Prof, answer this, and then I will share the same question to Dr. Priscilla Chumisi Bafo. So you, Prof, you handle that immediately. After you, then Dr. Chumisi Bafo will come in.
Okay. Well, I think the thing about transparency, accountability, is that they are integrated in the stewardship of government officials. So when you say you are disbursing some amount of money to vulnerable people in the country to solving or reducing the problem of poverty, it is expected that you be transparent by capturing the data you are working with, by sharing the data, and then by providing a report that everybody can read. So that is what should be done. Should it be done half yearly? That is possible, and that can be requested to be done so that we don't wait until the end of the year when accountability is done in full, by which time whatever will be the mess have been caused already. So this is something that we should be thinking about. So government officials, ministries who are supposed to undertake this project of disbursing to these people are themselves supposed to be transparent and accountable to the government itself and to the people of Ghana. So that is their first call. Then whatever we are asking journalists and civil society to do, it's only to augment what is supposed to be the case. So I'm not sure we can impose any extra, activity on government to do to show to us that it's being transparent or not. It's integrated in what they are supposed to be doing.
All right, sure, Prof. It indeed is integrated in what they are supposed to be doing, but do they do it at all? Well, I throw this question to Dr. Priscilla Chumisi Bafo. And Doug, if you can hear us, help us to see how we can ensure transparency and accountability on all this funding that is coming in an election year.
Hello, Norvan. Can you hear me, please? Hello. Can you hear me, Norvan?
Yes, we can hear you, Prof. Doug, yes.
Okay, good. Yes. So essentially, I think that in an election year, issues become quite.
I can hear you, Prof.
Okay, great. So I'm saying that, yes, this year is an election year, but in terms of the management of the economy and all, if you look at the fact that there's always the election cycle in our budgets deficits, essentially, you would know that, yes, in periods of elections, government tends to overspend and then comes to power. And we use a couple of years following to clean up and prepare for another election again. So for me, the issues we need to look at are not very peculiar. I think issues of procurement is a big deal in this country. It is the foundation of corruption in this country. Issues of sole sourcing, of contracts here there. I think that institutions need to work. And in this regard, there are what opportunities are we taking advantage of opportunities of technology, digitalization to track? Because when people conduct transactions via the digital medium, there's always a way to track it. And so in that sense, there are ways that you can use to prevent corruption and the leakages that we find. So institutions such as PIAC, for example, I think that they should be up and doing. CSOs, there is the right to information law. I think CSOs can take advantage of it, no matter how long government institutions drag their feet, somehow the information would come up because it is to share the information. Gone are the days where government activity was shrouded in secrecy. Now people have a right to know, and government also has a responsibility to provide the information. And so, for me, in terms of overspending, you could look at areas of tax exemption, for example, where you would find that a political associates year on year in benefit from these exemptions, but we don't see the pass-through effect in terms of if we are using tax exemptions to engineer growth in certain sectors of the economy. Essentially, you find that the country keeps bleeding, but you don't really get tangibles to be able to back these exemptions that we give day in and day out. And so, in an election year, I think that yes, the electorate are also demanding a number of things. Roads are a critical infrastructure that is demanded. So I believe that government ought to be prudent. We are under an IMF program. We need to stick to the budgetary allocations in terms of not overspending and overrunning so that we run a budget deficit and then would have to do all the corrections after a given election. And essentially, this election promises to be a very fiercely contested one. And when the stakes are that high, then issues of monetization become very significant. And I think that as a country, we need to build institutions where these checks and balances exist. And for that matter, no matter who is in power, whether it's an election year or not, I think that we need to get beyond this level and make institutions work so we don't overrun our budget as consistently we do, because this democracy we are practicing it is going to be with us for a very long time, and the cycle will exist. So as a society, I think that we need to find a way to get past that pattern of overspending in every election year.
Okay, very well. Thank you so much, Dr. Priscilla Chumesi. You are an economist, and let me ask you this before I will move to Professor Lord Mensah. Now, for many years, we've signed these agreements. How does these credit agreements impact on our economy? Because many have said that for years now, that's why we've been to the IMF more than 17 times. We've signed all these agreements and we don't see it. It just looks like our politicians don't get it. They spend all these funding, too much of consumables, not tangibilities as you raise it. How can we go about this to ensure that when we go and sign these kind of agreements, there will be proper impact? So that when the assessment, as project management, so when we do the impact assessments or the monitoring and we do the evaluation, we can point to things both physical or even some which are not really physical within the economy and say, indeed, this 1 billion that came in has helped change the fortunes of this country from moving it from, let's say, from 2 to probably 3 or 4.
Right, Norvan. Essentially, if you critically look at IMF interventions, it's all about restoring macroeconomic fundamentals, right? So the economy is struggling. We dealt with issues of high inflation, issues of debt unsustainability, growth is adversely affected. So the whole idea behind the program is that you are struggling and you need some stability. It's like you are sick, you go to the hospital, you have to be brought back to the level before the illness. And so it is post-program, which is usually what is critical. And when you look at the IMF programs that we have signed on to, you see that the key issue is restoring fiscal imbalance, macroeconomic stability. In that context, we look at fiscal consolidation, where government controls its expenditure, and then we also revamp our energies in the area of revenue mobilization. But a key aspect of the program is also on issues of structural reforms, where on the structural reforms, you make a conscious effort to invest in strategic sectors of the economy which will engineer growth. But when you look historically at our IMF programs, you find that essentially our focus usually is on the macroeconomic stability. So there is no doubt that so long as the program is on, the stability will attain it somehow. And when you look at it currently, you can tell that there is some relative stability because of the calming down of the turbulence that we saw on the foreign exchange markets because of the inflows. So in that context, what we need to do is to be intentional going forward in building strategic sectors, areas of improving our agriculture, improving value addition, investing in manufacturing, and even the service sectors that are generating jobs. You see, those are the issues that we need to invest in. But those structural reform time and the macroeconomic stability, they don't take that long of a time to achieve. So you realize that we are always excited when we get the stability, but when it comes to the structural reforms, we don't do too well over there. And when that happens, it means that the country is set back on a growth path, but then the growth is not resilient. So the slightest shock, you see that you find the economy back on its knees, needing another bailout of a sort. So for me, I think that the emphasis should be on the structural reforms that we need to build back better, in a sense that we grow in a resilient way, a growth which can somehow resist a bit of the external pressures that we see. And that would be emphasizing on import substitution, reducing our reliance on foreign imports so that we strengthen our economy, and then the cycle goes on and on. So that essentially is the issue. Norvan, are you there?
Thank you very much, Dr. Priscilla Chimesi-Bafo. If you just joined us, we want to welcome you to the Norvan Report Economic Governance Platform X-Space series that looks at issues that affect you and I economically, and how these issues can be dealt with to help make Ghana a better place for all of us. And we want to thank you for the decorum and the way we've all conducted ourselves, and this is the first in 2024 of many discussions that we'll be having prior to the elections, helping you understand what the real issues are, so that when it's time for you to make a decision as to who next is to lead this country, you're able to make that decision. Because what we want to do is to affect, decision making as far as the issues are concerned. And policy-wise, policy decision-making is what we are targeting, and that's why we do this. My name is Norvan Reports. I am your moderator for tonight. We've been on flight since 7 p.m. We will be landing shortly, but there are some few things that we still want to do. At this point, ladies and gentlemen, we are also live on ABC News GH. So our viewers on ABC News GH, thank you very much for making time to sit and be watching us tonight. Now, what we want to do is, if you have a question or you want to contribute to the discussion, what you do for me is that you tweet at Norvan Reports, and then we would read your questions or your contribution. Will allow you to make your contribution as well by sending us a request to be a speaker, and then you can ask your question or you can be part of the discussion tonight. And so that's what we're going to be doing. But let me now move to Professor Lord Mensah. We've gone to the IMF several times, as I indicated, and some have said that let's blame the IMF, the people themselves, because they know and they see how for many years we have wasted funding that has come to us, but yet still they keep putting in or allowing us to say, oh, let the money go and support the vulnerable people, but are not able to monitor themselves to be sure that indeed that this money has been impactful within the economy and has affected. And so some say they just enjoy it when after almost every 2-3 years, we run back to them. Professor Lord Mensah.
Yes, Norvan, I'm here. Yeah, so we need to appreciate that. Before I answer that question, let me go back to your earlier question where you asked, how do we ensure that these monies that are coming functions as it's supposed to be? And we should also appreciate that some of these monies are earmark, inflows, especially monies coming from the World Bank. I mean, they will make sure that they are monies that will do exactly what it's supposed to do. But then what I'm afraid of is the moratorium space that we're going to enjoy, the indirect inflows that we are supposed to use to service our debt, that those monies that, will stay in the economy, what are we going to use it for? That is what, I get worried on. But then, even that one, we should appreciate that the Ghanaian system has been built in such a way that we're supposed to have all those checks and balances. That is why we need to be responsible as citizens when we are voting to elect the right leaders when it comes to decision making and expenditure directives. Let me come back to your question. You asked of our visit to IMF. I mean, several times, which is not making impact. We must appreciate that IMF has an objective. It's not for Ghana alone. When we go to IMF as a country, we go there for a purpose. And the IMF does not tackle country-specific policies. We need to appreciate that. They only come in to restore your macroeconomic, stability. But then it behoves on the country to make sure that this stability transmit into, country-specific developmental, areas. So if we go to IMF, for instance, this time we went to IMF for balance of payment support. That means that whatever money they are going to give us is just to help us stabilize our exchange rate, make sure our inflation is also trending downwards, ensure that interest rate comes down, and through that we see some economic growth. It behoves on the country to ensure that whilst we are enjoying all this, economic stability, we roll out policies or we make sure that the directions of our expenditures go into areas that will rebuild the economy so that our visit to IMF will not be immediate. We should understand that IMF has perspective. The lens or the eyes that they are using in looking at our economy is completely different. That is why yesterday, when you listen to the presser, the IMF rep, was it yesterday or last 3 days? The IMF rep, his focus wasn't on how you're going to spend the 600 million. All that he mentioned is that within hours, the 600 million will land in the accounts of Bank of Ghana. But as to how government of Ghana, spends this money to ensure that, we fall back out of our economic, difficulty, that is, they cannot direct us to that. They don't meddle in country-specific, affairs. But what they do normally is to help you to ensure that you come back to line if your economy is derailing. So from where I sit, I think it has to do with the country. And, it's about time we, the citizens, get to know who is better to lead us in terms of economic management. We shouldn't rely so much on economic promises because, there's a difference between what is delivered and what is being promised. And that is what we can use to measure, an economic manager, whether he's doing well or not. So, IMF does not manage individual specific economies. They just come in to give you support, technical and then financial support to ensure that you stabilize. And beyond the stability, you have to use your country specific policies to sustain it. Over to you, Norvan.
Thank you very much, Prof. Beg your pardon for that important discussion. Dr. Priscilla Chumesi, I think you went off a little bit. We have resent you the request to be a speaker so that we can just quickly wrap up for tonight. Now, let me come to you, Professor Gachi. But before then, as I indicated, you can, send us a request. I think we're having some technical challenges tonight. All the requests that have come to me that I accept so that I can make you speakers. When I accept, some way somehow it drops. We don't know why it's happening that way. I've had to use both my laptop and then my phone just to, hear, our speakers. I can hear Professor Gachi on my phone, but when it comes to Professor Lord Mesa and Dr. Priscilla Chumesi, I can only hear them on my laptop and some bit of delays in there. So forgive us. We don't know what this is. Our IT guys are trying to investigate. We hope that when we come back to you next 2 weeks or within next week, we will not have these challenges any longer. So these things will be resolved. But Professor Gachi, very finally, we're trying to wrap up for tonight, and it's 2024. I'm sure I'm taking you unawares, but we've heard you, we've listened to you, we've seen that these agreements and its impact, as far as our economy is concerned, and how we expect the handlers of the economy to deal with these things. But some will say, okay, what do you envisage for the future of Ghana's engagement with the commercial creditors? Yes, they're giving us a moratorium, 2026, but then there's still negotiations going on that needs to be done, and we are hoping that by mid-March, that should be concluded. And this is a question that will go along for all three of you. Well, let me start with you, Professor Gachi. What do you envisage for the future of Ghana's engagement with these external commercial creditors? What do you envisage will be the terms? Having given us this moratorium, are we going to see interest on the existing loans we have with these people, adjusted upwards, which probably will not even give the fiscal room in 2026 when a new government has just been inaugurated a year on?
Well, thank you. My understanding is that we have dealt with bilateral creditors, even that the details are not out yet. We are yet to deal with commercial creditors regarding almost about $14.5 billion credit that they have given us over time. The composition of commercial creditors is very interesting. It's interesting because no matter how you look at their profile, they are looking for return for their investment. And they are not like bilateral creditors who inbuilt in their approach, they provide longer term facilities, lower interest rate, and moratorium. Commercial creditors don't have anything called moratorium. Commercial creditors are looking for their returns. That's what they have invested. and that will be the crucial difficulties. So whether or not the 20 to 40% haircut that the government is talking about will sit well with commercial creditors will be something that will depend on how they do their calculation, the net present value of the new interest rate that they are, or the new coupon that the government is proposing, and the number of years that the investment would take to mature. All those things will actually determine whether they should agree on 20% or they shouldn't agree on 20%. And I'm not sure it's going to be just an easy road. It's going to be turbulent because some of the commercial creditors have already changed course. Some of the bonds are tradable. So those who bought the bonds maybe 2 years ago, 3 years ago, are not the same people who are holding the bond. So the characteristics of the people have changed. Whether we have had in the profile of the commercial creditors, people like vulture funds investors whose psychic and view about these things are totally different. Whether we just have normal institutional investors, so all those things will determine the course of action by the commercial creditors.
Okay, so thank you very much, Prof. Let me come to Dr. Prisa Chumlisi. I think it's the same question that I'm throwing at you as well. What do you also think, what you envisage from where you sit, what you envisage it will be? And then after that, I'll have Professor Lord Mensah also answer the same question.
Thank you, Lord. I believe that, as Professor Gachi has rightfully said, the treatment of commercial creditors under the debt restructuring is the most difficult phase of the debt restructuring, if you ask me. Why is that? Because the external commercial creditors. For the domestic creditors, yes, essentially, these are your citizens, more like a take it or leave it. Within the commercial creditors, also, you have a number of institutions where you have financial institutions that have bought Euro bonds, you have mutual funds, you have pension funds that are all in there. And so in terms of the number of engagements and probably institutions and proxy institutions that government would have to deal with, I think it will be quite a difficult task. And if care is not taken, there could even be an avalanche of lawsuits. Because essentially, if you are giving people 20 or 30% haircut, and within the instruments they bought, if essentially there were no small prints that are indicating, I'm not too sure. Investment comes with risk, certainly, and so I believe they know of the inherent risks associated with whatever instruments they bought. But like I said, for bilateral creditors, yes, you can engage them under the G2 framework, G20 framework, and get something to work. But these are a collection of different institutions and individuals. And the peculiar aspect of it also is that a number of Ghanaian institutions and Ghanaian citizens are also well invested in the commercial creditors under the Eurobonds and all those foreign investments that government ruled out there. And so I think that is where the tax is. But I believe that nothing is insurmountable. We have not walked this path before. And so I believe that government ought to be resolved to go through what is needed for us to get back onto a debt sustainability path. And for me, the caveat really is that We have not experienced this before. Prior to HIPIC, yes, we qualify for debt forgiveness and all that. Now we do not qualify for those, and that is why we are undergoing a debt restructuring. Going forward, I think that we need to be intentional and be careful, put structures in place, institutions, laws and framework where governments are not allowed to spend and move the economy to a point where debt becomes a problem. And so in that regard, we're talking about issues of policies. How do we essentially formalize our economy so that a lot of people fall into the tax net, so that we are able to generate the needed revenue for government machinery, for investment in the economy and all that. And also, on the other hand, how do we ensure that structures exist to curtail government expenditure so that we do not borrow to invest in recurrent expenditure? Because if these borrowing had gone into investments, I believe that those investments would have yielded some returns to be able to service the debts that we are now restructuring, basically.
Thank you very much, Doctor. Let me come to you, Professor Lord Mensah. What do you also think? And whilst you answer that question for us, there is this very last question that comes to mind. Are there alternative financing mechanisms that should be explored, in an economy like this? Professor Lord Mensah, please.
All right, thank you very much, Norvan. Yes, so when it comes to the external creditor, commercial creditors, we may have to look at about 3 to 4 parameters. One of them is we've had already a debt suspension, which has delayed the returns on investment for these, creditors. And so whatever, future, agreement or negotiations we're going to have, they may have to factor in, this delay in returns, which is a cost to them. So in future, they will factor that into the returns they're supposed to have. We also need to appreciate the diversity of the investor community and appreciate that, of course, the more diverse they are, the more difficult it will be, negotiate with them. And the last thing I would like to touch on is the alternative use of funds. The investment space, what is happening there at the time of the negotiations. If this external creditor should have his money now, what can he use the money for? We should appreciate that the Americans, talking about the Fed rate, the Fed rates are going up now. And Fed rate going up means that the external creditor is looking at that as a benchmark. And as a result of that, if you are going to defer or renegotiate on a debt, which is going to pay coupons and principals in the future, obviously they may have to factor in this alternative, use of funds. So I think taking this three into consideration, we're not going to have it easy. But like I said in my earlier submissions, there seems to be a leverage. One of the leverage is having, what we call it, an agreement with the OCC, which is the the Bilateral Creditors Committee, and then also having an IMF, support, not just the financial resources, the soft, resources that they give us, which is the credibility. I think we can make, inways. But then we should appreciate that it will not be the same as, the external creditors, the bilateral creditors and that of the, what we call it, the domestic, creditors. But then your question on alternative, financing sources. You see, we've been talking about possible, possible financing, where we look at, government, introducing taxes. That is on the revenue side. Government finding a way of roping in the informal sector, and a lot of tax handles have been introduced. But I can tell you that if you make it a conscious effort to reduce your expenditure, and especially on the discretionary expenditure, is an indirect way of financing your budget. Let me put it that way. Because whichever way you look at it, if you are to increase your taxes, you are closing in the budget deficit. If you reduce your expenditure, you are closing in the budget deficit. But then, as a country, we have been overemphasizing on revenue enhancement, and that is why you see a lot of handles here and there, and we seem to be losing focus on expenditure rationalization, where we may look at the expenditures that are at our discretion. So, for instance, you talk about goods and services, talk about capital expenditure. At what time and at what point do you have to do a certain investment? It won't be like you are just going to put out, the investment to please the people. Sometimes some of them are not, finished, investment. Let me give you a typical example. We talk about, project like the STEM and other things, and you see party faithfuls going to stand by the building and then taking pictures here and there. But when you go into the building, what is needed for science education, for engineering education is not in the building. So effectively, you could see that we've spent the money to put up the structure, but timely, we are not there yet to make the policy, to have effect. So from where I sit, I think we can rationalize our expenditure, and that would be, alternative financing sources that we can tap into. Over to you, Norvan.
All right, thank you very much, Prof. I want to say a big thank you to all of you for making time with us tonight. This has been the Norvan Reports Economic Governance Platform X-Space series, and a big thank you to Osfam, who has also supported us, since we started these space series when it used to be Twitter, and then Elon Musk decided we should call it X. So it became X-Space series. A big thank you to you, Oxfam, for your support as well. And then to you, Economic Governance Platform, for the great support you've given us in all diverse ways. We are grateful to all of you. I want to say a big thank you to all of you who have been following us and have been following this series. This is the first of many other series for 2024. We went on a small break, but we are back. So you can tell someone and let some other people know that the Norvan Reports team are back with the X-Space series. A lot of issues to look at: taxation issues, corruption issues, issues that affect governance, and many other areas that we'll be discussing in 2024. So you just have to. And who knows, if there's a topic that you want us to discuss, or there's a resource person that you think that will be best fit to also help advance the conversations and help us affect policy, why not? You can always DM us at Norvan Reports with all the details and everything, and you are rest assured that as listening and inclusive as we always want to be, we will factor all that into our discussions in the year 2024. So we are open for all that. And let me just allow my guests to make their very final statements, big statements that they want to make for the year 2024, what they are looking at. Yes, we've discussed this issue of bilateral creditors, but I don't know what, as finance and economics people, what they envisage in 2024 and what advice they can give you, as well, to help us have a better economy and to help us move the nation Ghana forward. And that, I will start with Professor John Gachi. After that, we'll go to Professor Lord Mensah. Since we had a lady start, the lady will end for us. That Dr. President Chubesi Bafo will be the last person. So let me come to you, Professor John Gachi. I want to thank you for having been the first to start the space with us in 2024. What's the big statement? What do you want to say? What should we expect? What should we, prepare ourselves for as far as the year 2024 is concerned? The economy, the larger as it is, and all the issues that are cropping up. Okay, I think we lost Professor John Gachi, so it will go to Professor Lord Mensah, if you can unmute for us.
Yes, Norvan, I hope you can hear me. All right. So my advice is that I think it came in my earlier submission that the IMF program supports the expenditure
Yes, please.
Okay, so the IMF program support expenditure on the side of supporting the vulnerable. But then I'll pray with the government that they shouldn't hide behind these expenditure lines to derail our budget, because anything beyond what we can absorb in this economy, I tell you, would be a problem. But then also, we should take advantage of the inflows that are coming. I listened to the finance minister very well. I mean, with the 600 million, we are going to unlock about 1.15 billion US dollars as other ancillary support that is supposed to come into the economy. I will advise the government to take advantage of this to correct the yield curve. And if I say the yield curve, what I mean is that they should use the inflows to make sure that the appetite for short-term, funds will move to medium to long-term, so that the investor community will start investing in long-term. Other than that, the overly concentration on treasury bills to manage this economy will not be good for us. So, from where I sit, I think government should take advantage of the inflows to send a signal to the market that they don't need, those excess, short-term funds, and as a result of that, their borrowing is going to be from medium to long-term, so that we move away from the pressure on the what we call it, the T-bills. Thank you very much. Over to you, Norvan. Hello,
Thank
Norvan.
you
Can
very
you hear
much.
me?
So let me come to Dr. Priscilla Chumesi, if you can also make your statement for us.
Thank you, Norvan. I think that for the year 2024, in terms of what government must do, I think government should stay on course under the program. Particularly, the focus should be on keeping inflation under control. Now, inflation is on a deceleration path. It is critical. Why is it critical? Because if inflation is not controlled and real wages keep being deflated in an election year, labor unions will be up in arms demanding wage increases. And under this budget, any significant such move can derail most of the gains that have been attained. So I think that macroeconomic stability is critical. Government needs to stay on course. And under the program too, we should also work on the structural reform aspect of the program. Structural reforms by investing in key sectors that are critical to engineer growth, and so that we build resilience in the economy. At the individual level, I think that what we have gone through is an indicator that there is always the need to diversify one's investments. Essentially, prior to this debt exchange, we knew that government instrument was as good as it is. You just buy it, go to sleep, and then wait for the tenure. But now it is quite clear. So to individuals, I believe that it's a big blow and is a big lesson that whatever investment portfolio one has, it has to be a blend of everything, a bit of this, a bit of that, so that at the end of the day, when the returns are pulled together, when you get a shock on one aspect, then there is some resilience in terms of the investment options you have. Particularly for me, given the precarious situation that a lot of our pensioners are in now, I think it's a very bitter lesson for especially young people, people who are mid their career towards retirement, to look at a broader option of investment rather than just putting all our eggs in one basket in one financial instrument, really. Thank you.
Thank you very, very much, Dr. Priscilla Chimesi-Bafo. And we'll say a big thank you to Professor John Gachi, who is the Dean of the Business School at the University of Cape Coast. And beg your pardon. A big thank you to you, Professor Lord Mensah, Associate Professor of Finance at the University of Ghana Business School, and also a full professor at GIMPA. And also a very big thank you to you, Dr. Priscilla Chimesi-Bafo, Senior Lecturer, Department of Economics at the University of Ghana. We're so grateful. We know that, there are lots of, I would say, other issues that we're calling your attention, but the sacrifice that you made to be here tonight to help educate our listeners, we don't take it for granted. We are so grateful to you. And a big thank you to our partners, that's the Economic Governance Platform, and then Oxfam for their support all these years. And I want to say a big thank you to all of you who have been part of today's space. We are grateful to you that being the first of 2024, you all made time to be part of the discussion. We are so grateful. We had some technical challenges, I must confess, but we will try and resolve these ones as we get on with these discussions in the year 2024. We must get it right and ensure that 2024 we have very good, better discussions. There are other avenues that people are clamoring for, and we'll try and add all that, because there are people who are not on the X Space who feel that we should have a Zoom and all that. So we are exploring all other areas that will widen the audience that we have. And I want to say a big thank you to ABC News GH. We've been live tonight on that platform. All of you who are watching ABC News GH, thank you for making time to watch Analyzing Ghana's Agreement with External Commercial Creditors, which is the first of our space series with Norvan Reports. My name is Norvan Akwaheford, and I want to say a big thank you to my team, Salom, Samuel, Joseph, and then Fuad, all of you for making sure that we have had a successful space. We are grateful to all of you for that. And I want to say a big thank you also to our another important partner, that is the Ghana Anti-Corruption Coalition group as well. And they have also been good with us. We're grateful to you. And then to Direct Finance for the support, our knowledge partners, and thought leadership partners who have always, especially to Mr. Jackson, who have always made time, and then we've had all the Georgia discussions with his team. Thank you very much to all of you. We will meet again